How about the Dolphins getting Tyreek Hill? Woo! It's over. It's over. I'll see you in the AFC Championship game in Miami. Most likely we'll have home field advantage.
Hey, I hope that happens, and you and I will both be going to that game together, and it'll be great.
Hey everybody, JC Peretz here, founder of AllStarCharts.com, and I am joined today by my esteemed colleague, Mr. Sean McLaughlin.
Oh man, it's such a pleasure to be back with you, JC. I feel like it's been a long time since we've done this together.
Yeah, you know, Straz and I just hanging down in Miami, no big deal. No big deal.
Hey, I have to admit, I was a little jealous. You guys are having fun down there in the warm weather while I was up here battling a snowstorm, but that's all right. It's all right.
We're down in Miami. Life is not just about options, Sean. There's crypto markets too, remember. You know.
So I've heard, yeah.
Crypto capital of the world. We had a good time in Miami. Had some adult beverages. There may or may not have been shots of Jameson. We had a good showing. A lot of people from all over the place. We had people fly in for that happy hour, by the way.
Well, the shots of Jameson feel right. I mean, it was St. Patrick's Day week, so yeah, good move. Well played.
Even if it wasn't. So we had a young man named Giannis who goes to NYU. He's from Austria. He flew down for the event, which is cool. We had a couple other people from out of town that just happened to be in Miami. I guess there's always conferences in Miami in the winter. So there were all kinds of random conferences going on, and people were telling us that they just happened to be there for those things. Like even other industries and stuff that, you know, people were just interested in the stock market and just happened to be in town. So that was
well, glad to hear conferences are coming back. I know we're going to one next month in Washington, D.C., so pretty excited about that.
Yeah, by the way, while we're on the subject, April the 27th, 28th, 29th, CMT Association putting on their annual symposium. I've been going for many, many years. I always learn something new. I always meet somebody new. I usually learn more than one thing. I usually meet more than one person, but you know, always a great, you've been yourself and, you know, right?
Yeah, it's one of the better conferences I ever go to. They're always great.
All right. Let's talk about the trade of the day. I was going to buy some stocks, but I got high, right?
Yeah, the trade of the day today, GrowGeneration, GRW, from that really sexy sector. I say that tongue in cheek, from the marijuana sector. Yeah, boy, the marijuana sector, the marijuana ETF and all the stocks involved in it have had a really rough 18 months. I mean, there's no sugarcoating that. And, you know, buying beaten down stocks and buying beaten down sectors is not something that we tend to make a habit out of. But every so often, after all the hot money's been just ground out, have been, you know, just beaten to death, all of a sudden, some opportunities start to perk up that look compelling. And this GrowGeneration, GRWG, came all the way back. It's hard to see from that chart, but that is a 90% pullback from the highs up around 50, 55. But what's interesting about that 90% pullback is that it found support right where we would want it to find support, right around the previous highs from early 2018. And, you know, that was something that caught your attention. I know you talked about it in the bi-monthly conference call the other night. You know, what are you seeing, JC, that got you interested in this stock?
You know, it's really a microcosm of a bigger trade. You had a lot of big, you know, growth names, you know, no pun intended here, but just growth stocks in general, like any of the Cathie Wood ARK funds just got murdered, you know, biotechnology, you know, the IPO index, like a lot of that stuff just got crushed, right? Like the SPACs. And then the marijuana stocks are right in there with them, you know, peaking around similar times, similar destruction, maybe even more destruction. And, you know, a lot of them are finding support, bullish momentum divergences, a lot of insider buying in a lot of these technology companies that have gotten beat up that have similar risk versus reward sort of propositions as this one. So my suspicion is if this one works, a lot of the other ones are going to work as well. If this one works and the others work as well, this one will probably work even more so because you're adding another layer of crazy to it. So you're getting more, right? You're getting more extreme moves in both directions. So I think from a risk versus reward appetite perspective, it makes a lot of sense. But this particular situation is not just about price, but also including that layer of implied volatility, which is high.
Right. So as everyone knows, one of the first things I look at before putting on an options trade is where is the implied volatility? And the implied volatility in these options is still very high. It's off the peak of where it was, say, 2 weeks ago, as you might expect, as we've bounced off of the lows below $7. But the implied volatility, historically speaking, is still very high. And when I started looking at it and thinking about the absolute dollar price of the shares of the stock's trading around $9.50, give or take a few cents right now, but right around $9.50. I was looking at the options chain, and if I go back out to January, which is 9 months from now, the 750 puts were offering in the neighborhood of $1.50 premium. And I was just like, man, I could sell the 750 puts. It's a strike of 750. Can get $1.50 for them. That means, I'm protected down to $6. Boy, worst case scenario here, if I'm short some naked puts and this stock, in an absolute worst case, goes to zero, which would be terrible, but we have $6 of risk from here to there. I mean, it became very compelling as, hey, maybe we should sell some puts, but I didn't want to just sell puts. I mean, that's not the play I wanted to be in, because talking to you guys this morning, we were kind of talking through this idea. The upside here is if this stock really does want to bounce and make a move, the technicals are suggesting that we can make a move up into the 20s, maybe in the high 20s. And if that's the case, boy, I could sell those 750 puts that I was talking about and turn around and take that premium and buy the 15 strike calls to pay for that. And boy, if GRWG gets into the 20s, those $15 calls are going to start playing real nice. And the best part is they wouldn't have cost us anything because the short puts paid for the purchase of those calls. And so I really like this idea. It's a long shot. I mean, I'm not betting the farm on this trade, right? But it's a long shot that if it does play out the way we think it might, it could be a really nice winner and, leveraged returns, right? I mean, it's a pretty compelling idea. So that's the trade that we put on this morning. And when I put the trade on, I sold those puts and I bought the calls. I was able to get a 5-cent net credit. Prices are moving around and the bid-ask spreads are a little wide, so you might have to play around with it a little bit. But even if it costs you a 10-cent debit to put the trade on, I mean, I just want to be as close to net zero cost as possible. That's the way I like to do risk reversals. I'm not trying to make money on that upfront credit, and I want to keep my risk as low as possible. So more of a credit I can get if I can, that's the goal. But the real goal, and this is what we do all the time with risk reversals, JC, is we're not just going to put that trade on and then just let it sit. Obviously, we have our risk management level. If GRWG breaks these lows from earlier this year, which is around 674, I believe was the actual low. If we break below that, trade's off. We don't want to be in anymore. We're just going to close it, limit our loss the best we can. But if it goes up, the real goal here is, JC, is I want to be able to sell half of the calls that I bought and take those proceeds and turn around and close all of my naked short puts. Because if I do that, JC, then that means I got a half position of long calls that have cost me no money. I got a free trade with unlimited upside. And those are the kind of trades I love to be in.
I love those so much because it gives you the peace of mind to be able to stay in it. We have a similar situation. In this case, there were leaps, not a risk reversal. But in those Chevron calls, we took half off. We have free call options going out till January of 2024. And it's a free ride. It's a joke, the fact that we are able to have this free trade on and we have energy exposure for almost 2 years. It's ridiculous. So that has already passed us. That was a good trade. Great. This is something completely different. And then also I want to reiterate that this is a hero trade, no doubt about it. But you guys following along know that not all of our trades are hero trades. There are a lot of trades that are very high probability outcomes, and the reward's not going to change your life, but it's nice income that we can generate, and that certainly adds up over time. This isn't one of those high probability of success, low return. This is, I would argue, maybe a lower probability of success from a more technical perspective. We're fighting a trend, but if we're right, the reward is going to be, it is a big deal. It is portfolio changing, maybe life changing, depending on your irresponsible position sizing. But, position sizing responsibly, as we continue to stress, it could still have a huge impact on a portfolio.
Absolutely. To reiterate what you were saying there, we do not suggest irresponsible position sizing when you are working with naked options, and in this case, naked puts. Yes, we do have a floor here that can't go below zero, but still, when you have naked exposure, you want to make sure you're paying careful attention to your position size, and when in doubt, always go smaller. That'll keep you in the game longer, I promise.
Yeah, it's longevity, right? So just a couple of quick tidbits of the marijuana ETF MJ. This is actually the largest component. It is, believe it or not, a larger component than the, what's the other big one? Tilray. Tilray is actually a smaller component in the MJ. So just a quick little fun fact there. And then just to reiterate what the trade is, we're selling the January 7.5 strike puts. This is January of 2023. January 2023, January 7.5 strike puts short. We're selling those short and then taking the income to go ahead and purchase out of the money January 15 calls, 50% out of the money. So we're really going out there. So this is a real deal, Holyfield YOLO trade.
Well, as you like to say, JC, YOLO responsibly. And I feel like this is a YOLO responsibly type trade.
Risk management, taking half off the table. Like, this is YOLOing with a plan. You know?
And by the way, just random thought when you're talking about the weighting, how this the largest component of the MJ marijuana ETF. Look, if you're bullish on marijuana space over the long run, I don't know about you, but it's usually good to be in the biggest name in the space if you're bullish on the space. So that's just another reason why I like this trade.
And then it's the biggest in terms of components, but from a market cap, just keep in mind it's a small cap. It's about 600 million. Tilray's about 3.5 billion. So there are bigger companies. This just happens to have the most exposure or the biggest weighting in this particular ETF. So just understand it. I mean, it's liquid. I was surprised at the liquidity in the options market. Believe between you and me.
I know when we were talking about the trade, your first question was, is it even liquid?
You look at the market cap, right? And it's like, you would think theoretically that the options market wouldn't be that liquid, but hey, it is. So once again, we are putting on a GrowGeneration bullish risk reversal, and we're selling the January 7.5 strike puts short, and then using those proceeds to purchase an equal amount of the January 15 calls. I like the trade, Sean.
I like it too, buddy. Let's make it go higher.
How about the Dolphins getting Tyreek Hill? Woo! It's over. It's over. I'll see you in the AFC Championship game in Miami. Most likely, we'll have home field advantage.
Hey, I hope that happens, and you and I will both be going to that game together. It'll be great.
All right, guys. Adios.